Welcome, everyone, to Weekly Tax Update for March 8th, 2024. A lot going on this week. This is episode 96, available on YouTube over the weekend. That's me, John Sheeley, EA. You notice I've updated the look. That's the COVID look. This is the post-COVID look. I need to update that picture as well. Welcome, by the way, to just below the Borscht Belt. The signs are starting to appear. They're doing a fabulous job promoting the history. So happy to mention that as well, rather than my famous cream cheese comments all the time. No update here. I'm in Las Vegas on May 15th. Latino Tax Fest June 24th to 27th. That overlaps with Frank Agostino's barbecue. We'll see how this plays out. The New York, Connecticut Association of Tax Professionals, I will be live up there July 18th. And then I will be at CSEA June 11th and 12th speaking on artificial intelligence. So all these events, maybe except the Connecticut event, we'll do a mixer afterwards. So stay tuned. No, you don't need to come to the event. If you live in the area, by all means, you can stop by the mixer. We're happy to say hello to our friends. If you are not a subscriber, you should be. $52 a month gets you access to all the continuing education we do. We have a jam-packed year coming up, and we'd love to welcome you to all of our programs. As someone once said to me, you've got too much CE. There's no such thing as too much CE. This should be something for everyone. Speaking of something for everyone, coming up on March 25th, join Jessica Smith and I as we talk about when they owe but can't pay. So you've got those clients that have a balance due, weren't expecting a balance due. They're like, put me on extension. No. We want you to have the tools to be able to close these deals. And a lot of that will be the education, knowing what the client's options are. But you want to be able to push these folks out and get them to pay you for your hard work. In the handouts, you'll find the resource page, which has all of the links to the different things that are mentioned in the program, websites, and handouts that we give you. All the links are in there. So I was about ready to stop talking about the nationwide tax forms for a few weeks, and then they opened up registration. So I've listed for you, in addition to the 5 dates, early bird rates are available until at least June 17th. In some locales, they're open a little bit later based on the date of the event. June 18th to June 25th, the price is going to go to $309, and then after that, regular price is $390. I have to tell you, for 18 CE, that's pretty competitive anyway. So it's probably this is your cup of tea. It's definitely worth checking out. So IRS Statistics, we do try and do this as late as we can to give you the most current numbers possible. This is still numbers that came out late last Friday. There'll be numbers later today that'll be 1 week more current, but for now, this is the best we have. Now, you need to keep in mind that there are less filing days this year than there were last year. There's 7 less days because of the later start. So right now, tax returns are down 3% total received. I don't know that we can draw an inference from that quite yet. I think once we have the numbers through March, we'll start to get a better feel for this. Web usage is still up. E-filed returns are down. Now, tax professional returns are down 4.7%. Self-prepared returns are down 1.4%. An interesting thought I have here, though, is that many tax professional returns, not all, but many, involve more complex returns, and K-1s and other reporting documents aren't out yet. So I don't know how much of an inference we can draw that professional returns are down 4.7% versus self-prepared are only down 1.4%. Maybe we'll draw an inference later, but not yet. All right, other data available. Most of this data is through today. So there's been not much of a movement. They're processing February 1040 returns, even though we're in the second week of March. We have seen some movement on amended returns, although they're pretty consistently 4 months behind. As far as business returns, pretty much the same thing. The amended returns have picked up a little bit. 941s, they're processing February returns, and but that's it. No other movement on business return processing. As far as all the other stuff, nothing has really moved other than Form 1045 applications for tentative refund. They are now processing July of 2023, which keeps them a full 7 months behind. Powers of attorney, they're saying are processed within 4 business days after receipt. Maybe. It's definitely faster than it used to be. Uploading them gets them done even faster. We definitely aren't seeing those powers of attorney go into hyperspace so much anymore. So, boy, Corporate Transparency Act was ruled not constitutional. But before you jump up and down for joy, very limited scope. Now, originally we thought maybe only this district or this circuit. It's even more limited than that. So first, you all know what the Corporate Transparency Act is. If you don't know at this point, we've been talking about it for 3 years. Plenty of video you can go watch on what the Corporate Transparency Act is, or the Beneficial Ownership Information Reporting, BOI. District Court for Northern District of Alabama. Who would have thought there's more than one district in Alabama? Issued a final judgment in the case of National Small Business United, which is the National Small Business Association, sued Janet Yellen, the Treasury Secretary, in her professional capacity as official capacity as Secretary of the Treasury. The court granted summary judgment. They didn't even go to trial. They said, yeah, this isn't enough here for the government to impose this law. They found that they are entitled to the judgment as a matter of law. The court issued a final declaratory judgment stating the Corporate Transparency Act is unconstitutional because it exceeds the limits on Congress's power as outlined in the Constitution. The court made no ruling, though, on the constitutionality of the act on other grounds. It's very interesting here. There's a little narrow piece. They're saying, we're not saying you can't collect the data. We're saying maybe you can't require it. Maybe you're not the appropriate folks to have done this. I don't know where they would have gone with this if it had gone to trial. So the defendants, along with any other agency or employee acting on behalf of the United States, are permanently enjoined from enforcing the Corporate Transparency Act against the plaintiffs. But just the plaintiffs. The court's going to hear arguments later on who's got to pay who. The judgment is pretty significant for small businesses and tax professionals because it may limit the enforcement of the Corporate Transparency Act. So this was last Friday, and we went to the website, and we're like, FinCEN, is the website down? What are they doing? Press F5, press F5. There was a request by Bloomberg and some of the various news agencies looking first from FinCEN for comment. FinCEN said you got to talk to Treasury. Treasury was silent all weekend, and then on Monday they posted a news release. So they said they're going to comply with the court's order as long as it remains in effect. The government will not enforce the Corporate Transparency Act with respect to the plaintiff. The plaintiff was a guy named Isaac Winkles. It's a great name. Winkles versus Yellen. Winkles reporting companies in which he's a beneficial owner or the applicant are not required to report. The National Small Business Association is not required to report. Any of its members as of March 1st, 2024 are not required to report. Well, that's cool. Those individuals and entities are not required to report ownership to FinCEN at this time, pending resolution of this case. So, I'm going to come back in a minute and just give you my thinking on what we're doing here in the office and maybe what you should think about doing. So prior to that announcement, I was going to tell you that there's a new podcast out there on the Corporate Transparency Act. Holland & Knight is a large international law firm, and they do some pretty good stuff. They don't do a lot of training content, a lot of webinars, but their first episode of the CTA podcast is Corporate Transparency Talk with tax attorney Alan Granwall. I think that's neat that it's a tax attorney and not some other litigator or a compliance attorney or somebody who does transaction work, right? Forming companies and merging companies. This is one of us, tax guy. So this first session, they're supposed to do a high-level overview of the Corporate Transparency Act. He wants to talk about what was the intent of the law and why we're complying with it. I think as issues evolve, these are going to be the guys on the front run, on the leading edge, hearing about problems and thinking through, well, what about this? The law isn't clear. What about that? The regulations don't match. The BOI Small Business Guidebook doesn't talk about it. So as these guys talk through these problems, I think that's going to be a lot of insight for us. I think this is a good podcast. And I'll let you know as it comes out. Now, speaking of which, because they declared the CTA unconstitutional, almost immediately Holland and Knight said, let's do a webinar on this. So there's a webinar coming up on the 11th, which is Monday. It's free, no CE. So if you're an attorney, you can get CLE in about half the jurisdictions in the country. So there is a link to this item on the my resources page. So that in the handout, so you can go here and register yourself. I'll be on it. You should come on it and listen too, I think. So how does this ruling affect our practices? Well, I didn't want to be doing these things during tax season anyway. And last Friday, when it was unconstitutional, I started drafting an email, and I was going to use the court case to change my client's behavior. Everybody likes to hear, yeah, the little guy, somebody went out and won one for us. We don't have to do this, at least right now. And, if you listen to Bob Jennings, he's been telling us for a year, don't run out and file these things. Wait till October, right? So I want to get out proactive announcements, right, via email, via text. We are currently reevaluating all filings. Entities formed in 2024, I think they're stuck with that 90-day registration period. Remember they said for a phase in this year, normally you have 30 days after you form the entity. During 2024 only, an entity formed in 2024 will have 90 days in which to go out and register. So you're kind of stuck with that. Entities formed during 2023 have all year, 2023 and earlier, have all of 2024 to register. My official line right now is we are recommending you wait. But since FinCEN is planning to enforce them, we know now this week, probably we're going to have to do them. But this is a great way to push it off at least until May, right? Gets you past tax season. My thinking, free for worth every penny you're paying if it's free. President Biden had the State of the Union address. And there were some. It's a re-election year, so of course everybody's trying to hit every point. But he brought up some interesting points in the State of the Union that I think are worth mentioning here as we think ahead. Especially file this under in case the clients ask, right? Because they're all going to ask. Now I have a complete transcript of the State of the Union available to you. The New York Times transcript looked best. It's outside their firewall. The link is in the resources tab, the resources page. So go ahead. So President Biden is aiming to make the tax code more fair. He said big corporations and the very wealthy need to pay their fair share. And he defines the very wealthy, of course. The goal is to cut the federal deficit by $3 trillion by making these people pay. Now, one could argue that, well, if you make big business pay, what's that going to do to the stuff I buy from big business? Anyway. Those earning less than $400,000 a year will not pay any additional federal tax. Well, that was the promise of the Inflation Reduction Act, and it's interesting this administration views $400,000 as wealthy. You'll remember with the Obama administration, it was $250,000, and wow, all of those taxes that came in under the Affordable Care Act that were income-based, if you notice, doing $89.59 these days, $489.59, $250,000, right, is the cap, is where the new taxes popped in there. So these things will pop in at $400,000. This talk of raising the corporate minimum tax to at least 21%. There's no explanation provided on where they're coming from with this. So I'm unclear if this is that tax you on your financial statement earnings that was going to come to pass in the past. So we'll see. They do talk about those companies valued at $1 billion or more, again, tying in this whole anti-billionaire thing. Many large corporations pay less, meaning rate, than what working people pay in federal tax. Warren Buffett has said that for years, right? That his secretary was in a higher tax bracket than he was because the bulk of his income came from dividends. Dividends are taxed at a preferential rate. So the administration is looking to end big tax breaks for, quote unquote, big pharma, big oil, private jets. Boy, those 48 people they're going after right now, it's going to add up. Massive executive pay. What's massive executive pay? Well, you remember that publicly traded corporations are limited to a deduction of $1 million of compensation. Apparently, he wants to take they took away, you made $20 million. We're only going to let you deduct $1 million of it. The corporation just eats the other $20 million of the $19 million. Now we're going to take away the crumbs, right? We're not going to let you deduct anything for people that are paid more than $1 million. Now, what does that mean? Does that mean more deferred pay? Does that mean more equity compensation? I don't know what it means, but certainly someone will come up with a way around it. Now, there's a talk of by the president of a minimum tax of 25% for billionaires. I don't know what that means. Billionaires have equity. Billionaires have lots of capital gains. Billionaires don't have a lot of ordinary income. So I don't know what he's going to tax at 25%. We'll find out. They think they're going to raise $500 billion from this over 10 years. Okay. There's only 400 billionaires in America. So that's a lot of money per person we're gonna tax them on. So we'll see where this goes. Average federal tax rate for billionaires is 8.2%. There was no citation provided. I couldn't find anything online where that came from. It does seem like a relatively low number. It could also be a statistical lie where we took their income, their tax paid over their AGI or over their total income. Well, that's not fair, right? Doesn't give us a good picture of what's going on. So we'll see. I don't know where that's coming from. The president called for restoring the child tax credit. Well, I did a tax return yesterday and the child tax credit was still on there. So I read between the lines. Further on, he says the child tax credit I passed during the pandemic. Apparently, the CARES Act was passed single-handedly by the president. He's going back to the Al Gore book of where things come from, along with Al Gore's internet. So what does he mean here? The Democrats have asked all along the last 2.5 years. They've been looking for the increased child tax credit to be made permanent because they count that as a transfer of payments and that increases household income. And they continuously talk about how that has brought families out of poverty, households out of poverty, children out of poverty. They're not wrong if that's a transfer of payment that happens every month. The IRS is the largest social services agency in terms of dollars given and people impacted if you count the transfer of payment programs that are not exactly related to income tax. So what I think the president meant here was that he would like to see the expanded credit go back to $3,000 from $2,000, be delivered through age 17 rather than age 16, and for the children under the age of 6, deliver $600, $3,600. Now, although this wasn't said specifically, when they start talking about how it will increase household income and lift children out of poverty, they do mean a prepaid advanced credit. So you could see that coming back, right? 50% of the anticipated child tax credit. I agree that's not fair for folks who aren't going to have the child or going to have something change. As you know, you were allowed to go into the portal and disable that in the past. I think people will do that. I think this is a great thing for us because I'm going to need a transcript for everybody. I'm going to have to go online and check their transcript before I do the return because they're going to lose the letters, forget the letters, not have the letters. I think this is great, right? Accountants Full Employment Act. All right, the tax bill. Remember that tax bill that was coming? You were having your clients not file, and you were sitting back and saying, "Oh my, when am I going to start doing returns?" I hope no one is waiting for this because it's like waiting for Godot. He's not coming, or the Iceman cometh. And when he showed up, Kevin Spacey is the Iceman. When he finally showed up, it turns out he's sober and he's not the life of the party he used to be. That's this bill. So Senate Republicans still would like to see changes in the tax package. If you recall, when the bill went over, House passed it, bill went over to the Senate, and they said we'd like to be able to call from the floor and make changes under our normal rules and do what's called a markup. And everybody said, you're never going to pass this quickly. If you do, well, they haven't done anything. So ranking committee member in the Senate Finance Committee is Mike Crapo. He's the ranking committee member because he's not, the Republicans are a minority in the Senate. So he's been talking this up with his colleagues, according to Politico. And what changes do they want to see to get this bill passed? Now, the Republican Party is generally, but not exclusively, opposed to the House-passed bill. They've got a couple of things in there, mostly related to the child tax credit that they don't like. There are provisions pertaining to using prior year income if it's more advantageous. They don't like that. They've turned that into you don't have to work and you'll get the child tax credit. Well, that's really not what that means, right? John Cornyn said this week that he believes the Senate Republicans would be in a stronger position to negotiate next year. Chuck Grassley in Iowa said they don't want to give President Biden a legislative win. Who elected these people? President Biden or their constituents, right? They're like, screw the economy, screw America. We don't want the president to win. All right. Mark Wayne Mullen in Missouri, someone who I had not heard of before, I had to look him up, is actually advocating for quick action on the bill. Up or down, let's move it along. And within the Senate Republicans, there is not a lot of agreement. There appears to be a lot of, I'd like to see this, I'd like to see that, I don't like this part or that part. I think, my personal opinion, the bill is all but dead at this point, at least with respect to 2023. The House approved a 6-bill government funding package Wednesday. That's because they're going to run out of money today. That was passed 339 to 85. I did check before we started the program, in between the coaching in this program, and I don't see where it's passed yet. That could be an overnight thing where the Senate passes this. But they're supposed to vote on it today, and this alleviates the partial shutdown that was going to happen this weekend. We still have 6 appropriations bills yet to pass. Now, remember, this is the 2023-2024 budget that started last October. We have not yet passed Homeland Security or the IRS's budget. Now, we do have until March 22nd to get these remaining 6 items passed, or, again, potential shutdown. Starting March 4th, Direct File was available for certain users to start their returns 24 hours a day. So they were turning it on for periods of time, then turning it off, partially to watch the load demand, partially to make sure if there was something wrong, it wasn't going to affect 100,000 users, right? It would affect 10,000 users. Maybe they would fix it. Starting March 12th, they're going to turn it on to all eligible users in all 12 states that they're doing the test in. So if your clients ask, yes, it's out there. So I talk a little bit about AI. We do a little bit of AI work. We use AI in preparing some of this program, some of the back-end stuff at Tax Practice Pro, some of the course descriptions, some of the course objectives. These things are actually certainly polling questions. These things are assembled with a very, very robust and lengthy prompt, directing it into what kind of end result we want, but we're using these tools to get there. So it's important to know if there's a problem, if this stuff is biased, if this stuff isn't working, if this stuff is discriminatory, we need to know this. So Bloomberg did an experiment, and they found that OpenAI's ChatGPT, when asked to rank resumes, exhibited bias against certain racial and ethnic groups based solely on their names. Now, one might argue that this whole thing is biased or stereotypical. Let me get to what they did. Recruiters are increasingly interested in using generative AI, which is tools like ChatGPT, to automate parts of the hiring process. Here, 1,000 people sent me their resume today. Beyond the screening that we've had for probably a decade, we want to say, look for somebody who writes at a postgraduate level. Look for someone who doesn't use the Oxford comma. I don't know, whatever you're looking for, right? So the experiment involved Bloomberg's experiment, using demographically distinct names. I assume a sociologist was involved here, associated with particularly, I meant an anthropologist. So with demographically distinct names, so names that are associated with a particular race or ethnicity at least 90% of the time, then assigning them to equally qualified resumes. GPT consistently favored names from some groups over others, and this failed some of the benchmarks used to assess job discrimination. And this article, I gave you a link to it. I gave it as a gift, so it's outside Bloomberg's firewall. A lot of graphics, a lot of interesting stuff in it. So the preferences vary depending on the job role, which is even more interesting. Show that AI model picks winners and losers based on the context rather than disfavoring any one group. So they went to OpenAI, the developer of it, and they stated that the results may not reflect how its customers use the models. That's right, they're probably bigger racists. Businesses often take steps to mitigate bias. However, other experts argue that the assumption that AI tools are less biased than humans rarely gets tested. I don't know, Clay. Do you mean Bloomberg for doing this test or anybody for using AI? Right? Clay asks, are they setting themselves up for discrimination? Name discrimination in hiring is a well-documented phenomenon, with studies showing that applicants with distinctively Black names get fewer callbacks than those with distinctively white names, despite having similar qualifications. And they expanded upon this, right, into nationalities. Automated systems can replicate and hide a bias. They can put proxy variables in place of protected categories. For example, an algorithm might prefer candidates from a certain zip code as a proxy for race, right? We want people from Brentwood and not from some other neighborhood. Experts are increasingly concerned about the potential for AI powering hiring systems to perpetuate discrimination. The EEOC has already settled its first AI discrimination in hiring lawsuit. I could not find any information on that, but that's super interesting, at least for some of the research we're doing. Detecting bias in algorithmic hiring tools is challenging. Individual applicants often have no way of knowing why they were not hired. Companies are not compelled to share that data or how the tools they operate in practice. Now, I would argue one step further that the prompt I write could be the problem. I have no idea, right? How are we getting the bad result? Is the system tilted one way or the other? Is the author of the prompt tilted one way or the other? Is the test tilted one way or the other? I don't have an answer here, but I think that these are very interesting observations that Bloomberg is coming up with, and it's a good read if you want to take a read of that article. And it affects us because I think these are things for us to know as we leverage these tools to help us in gathering client data, processing client data, writing responses to notices. Marjorie Rollinson took the oath of office as IRS Chief Counsel. She is the 49th Chief Counsel after Commissioner Rettig. She is the first woman to permanently hold the top legal position in the U.S. Treasury. She will lead one of the largest legal teams in the federal government with 2,600 employees. She will also serve as Assistant General Counsel of the entire Treasury, U.S. Treasury. Chief Counsel and the IRS Commissioner are the only two Senate-confirmed positions at the IRS. That's it. The employee retention credit disclosure deadline is coming up. There's a March 22nd deadline to opt in. Businesses that want to take advantage of the voluntary program, if they received an ERTC they didn't qualify for. IRS has not made any decision about extending it. Like everything, they start with, no, that's the deadline. If you want in, you make sure you don't miss that deadline. The program allows businesses to repay 80% of the money they received as part of the ERTC program. Now, this has been phrased in other venues as, well, they get to keep 20%. How unfair. Odds are they didn't keep 20%. Odds are they paid somebody 30%, right, for getting that credit. They probably paid them 30% up front. So this is lose-lose for these businesses. So the IRS asking for 80% back to be in compliance seems to acknowledge that these folks were fleeced, even if they were kind of willingly knew what they were doing here. So this is one of the more interesting take-to studies we've seen. Safety at IRS offices. Now, just as a running gag, Mark Dombrowski probably isn't on this call, but Mark lives in Buffalo, and outside of Buffalo, there's an IRS collections call site in Buffalo, and it's actually at a former shopping mall, the Applegate Mall, the Willowbrook Mall. The name sounds like the name of the mall in Back to the Future, right? Where he, launches the DeLorean at the mall and he lands back in the cornfield. So it sounds like that mall name. Anyway, occasionally you get somebody on a second shift call. They're up at the Buffalo call site. And once or twice I've jokingly said to somebody, oh, are you in the Apple Grove Mall? And they get quiet and they're like, how do you know about that mall? Because it's kind of off grid, right? And I said, oh yeah, buddy of mine's an EA in Hamburg. And every time we're up that way, he jokes, let's go on a tour. And oh, who do you know? And a lot of these guys know Mark from being in the industry for so long, or from around town, or from the bar. So it's just kind of funny to make that connection, but no more. So watch this. So the IRS actually asked TIGTA to do this audit, which is a little strange. Treasury Inspector General for Tax Administration audits processes, systems, and results of the IRS, the kind of the watchdog, right? So the IRS Commissioner's Deputy Chief of Staff had a town hall with groups of IRS employees to get feedback. What are we doing right? What are we doing wrong? How can we make the place better? And they got feedback that some internet search engines were indicating that offices that weren't taxpayer assistance centers, in other words, offices with walk-in service, or actually offices that met people at all, some of the websites, the public data search websites, were saying that this is a place you could go and you could get help. So they took this seriously because they said, we've got people confronting us out in the people that are coming there might be unhappy and have a problem or a collection issue. And what are they doing? They're meeting us in the parking lot. They're banging on the door. They can't get in the building. And of course, there's not adequate security at these buildings because they're not expecting inbound people from the public. They're just expecting the employees. So it's a concern. So Deputy Chief of Staff advised TIGTA that the incorrect information was causing confusion, and can we look into it? So the objective of the evaluation was to assess the accuracy of the IRS's contact information when performing internet searches. I thought this was silly, and I thought this was going to be a funny part of today's program until I dug into it, and it's actually pretty serious. So using one of the most popular search engines, Google, TIGTA used specific keywords to determine whether information regarding an IRS office was accurately reflected. 600 errors with information received in the results. 158 errors when searching IRS Taxpayer Assistance Center in the 50 states, Puerto Rico, and DC. 158 errors when searching Internal Revenue Service plus the state name. For a judgmental sample of 10 states that they used. 278 total errors when searching IRS and the state name in all 50 states, Puerto Rico, and Washington, D.C. So TIGTA looked at these results with the true TAC information that's available on the IRS website and identified 4 categories of search engine results that require updating. Now, this is just funny. The IRS does not have a function to fully manage and update information pertaining to IRS locations on external search engines. This was amazing to me, and let me tell you why. They're trying to do a pretty good job, both with user interface, with public-facing websites, public-facing tools. They do some pretty cute stuff on Twitter and Instagram with their little messaging. So I was surprised that they weren't forward-looking enough to have somebody, even if they were just in the outsourced building management company, that was doing this stuff. Nobody doing this stuff. Tata couldn't confirm whether there has been a substantial number of instances where taxpayers arrived at non-tax locations, but there were enough that it was coming up in the town hall. So a need exists to ensure IRS employees remain safe. I think everybody agrees. IRS has an obligation to make sure that information provided to taxpayers is up to date and accurate, and that's probably true too. An already frustrated taxpayer who hears that there's Saturday service at the tax center and shows up at the IRS office and there's nobody there, nobody to let them in, is only going to get more frustrated. So it doesn't help that the IRS has inconsistent messaging out there, regardless of whose fault it is. We want this to be consistent. So for those of you that do better with graphics, I gave you this imagery that shows the 158 errors when they did a sampling of 10 states. And the 158 errors turned out to be correct when they just did all 50 states. And they did the IRS plus state for 50 other states. Now, this is a cut and paste. This is why I knew who this was when I said Google. So this was an actual search, and they went and looked. This location does not exist for taxpayer services. You can't walk into it, right? Yet, here's the correct address. Here's the hours of operation. But here's what was amazing to me after I saw this stuff, right? Because I knew if I Googled it by now, it's all gone, right? What was interesting to me was this. It's got 6 Google reviews. Now I said, and they only have 1.5 stars. So are these 6 people who went there and screaming and yelling and took the time to say, by the way, nobody's here, don't go there, right? All right, so you know me, right? So let's go off page a little bit. I went and what did I do? I Googled that address, right? What comes up? Well, what's on the right side here is what comes up. IA 527, I don't know what that means, but it does say government office in West Des Moines. It does have the correct address, and it does say here, just like all my favorite restaurants during COVID, permanently closed, gone, right? It's permanently closed. And you can suggest an edit. Now, it still has those 6 Google reviews, though, right? They didn't torpedo the site, which is what I would have expected. So what did I do? I said, I got to see who those 6 posts are, and is there somebody on there that is correcting it, that, by the way, this place is closed. So I thought this was interesting. Quinn gave the IRS 4 stars. Now, that's not his fault, right? He should have given it 5 stars. But if you notice, call center only. Go to at least he's helpful. Go to 210 Walnut Street, Des Moines. Now, he has 15 reviews. I did go Google through to make sure that Quinn wasn't a government employee, and on 14 other places he wrote, this is a call center. That isn't what he did, right? He was a legit guy who must have tried to go down there himself. I know you're all amazed that I took the time to do this, right? It's fun stuff. Anyway, what did TIGTA recommend? TIGTA recommended the IRS designate an office to be responsible for updating the IRS information on the external search engines. No kidding. Welcome to Al Gore's Internet, 1995. Each listing should have language referring taxpayers to the website where they can obtain the most up-to-date information. The IRS agreed with the recommendation and has taken the appropriate corrective action. And as you can see already, this report came out February 29th. Obviously, it was done last year and took time to go through the process. But the example website in their study has already been corrected on the internet. Now, maybe that's the low-hanging fruit because everybody and their brother knew that I was going to go look at that and then put this on YouTube. So Anyway, this has been done, right? So good for them. Good for the concern about IRS employee safety, and good for rapid action, and nice to know that they can all play well together when they need to. Okay, Saturday hours at 70 service centers, March 16th. This will be the second of 4 tax season Saturdays. IRS is open at 70 taxpayer assistance centers, 9 to 4. 70 cities include Washington, D.C., and a location in Puerto Rico, which is not a city. IRS also plans openings on April 13th and May 18th. I don't know how helpful May 18th will be unless they expect to catch math error notices and things and help people with those. They have extended hours. This is probably more useful. Extended hours on Tuesdays and Thursdays through April 16th. Your Inflation Reduction Act money at work, giving people better service. Tax hour give people an opportunity for people to meet face-to-face with the IRS employees to get firsthand help with tax account issues. Regular working hours of the tax are 8:30 to 4:30 on an appointment basis. Those of you that do international work, Ernst & Young has a cross-border taxation audit podcast they just started, and I would highly recommend you take a look at it. I just did. I subscribed. It's pretty good so far, and I think that if anyone's putting out this level of content for free, it's worth taking a look. So welcome. And thank you again for coming to our weekly program. I'd like you all to please join my YouTube channel. You can catch this video and other videos there. At the end of the program, it's going to redirect you to that page. So by all means, feel free to subscribe to our YouTube channel. That's free too. Everybody have a great weekend. I'm going to be here working, so I hope you guys are getting some time off today, this weekend. Thanks, guys.